Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are likely to start on a positive note on Tuesday. US stocks slipped crude gains on Russian tensions, rate hike fears. Talk about SGX Nifty. That's indicating a mildly positive start coming in for markets after a somewhat green close that we saw in the previous session of trade. Asian markets trade mixed on Tuesday following overnight sell-off on Wall Street led by technology stocks. Recession fears amidst rising interest rates and short-lived rebellion inside Russia weighs on the sentiment. Talk about FIIs. They've sold shares worth around 409 odd crore, and talk about DIIs. They've been supporting the markets. They've bought shares to an extent of 250 odd crore. FNOQs that we'll be keeping a close eye out on, 57 stocks that have seen long build-ups, and those include the like of something like Laurus Lab, Ipca Laboratories, IOC, Cummins India and Sun Pharmaceutical. 24 of them have seen long unwinding based on UI percentages. This includes the like of PVR Inox, HDFC AMC, Oberoi Realty, RBL Bank and HDFC. 19 of them have actually seen short build-ups, and this includes the like of SBI Card, Balrampur Chini, Astral, Shree Cements and Reliance Industries. Apart from that, 88 of them have seen short covering activities, and this includes the like of Rain Industries, Hindustan Aeronautics, Dr. Lal Path Labs, LIC Housing Finance and Mahanagar Gas. Well, stocks that are currently under the FNO ban on the National Stock Exchange, what has been retained is Hindustan Copper and RBL. As per the FNO ban list for its June 27, there are no new securities that are freshly added out here. But let us get going and discuss our stocks and strategies today with Sameet, Chavan, Chief Analyst, Technicals and Derivatives at Angel One. Morning there. How are you approaching the markets, and how's the trade setup shaping up for you right now?
Good morning, Nickey. See, market has been consolidating. There has been no major, momentum that has been witnessed in key indices. But yes, other, thematic moves have been unfolding since last few days. So the flavor has been the thematic movers. One has to focus or identify, stocks or a sector that is likely to buzz, and then accordingly pick a stock and then trade accordingly. So overall index specific, there has been no major trade setup as such. But as far as direction is concerned, we continue to remain bullish. The market has been maintaining its sturdy structure. A series of higher highs, higher lows can be witnessed in all time frame chart. So technically speaking, there's a strong base, around 18,650, 18,550 for Nifty. And as far as Bank Nifty is concerned, there's a strong support around 43,000, 43,200. So till the time we maintain our position above this important support zone, there is no real reason to worry for. So, before market clocking its all-time highs, reaching towards its next milestone of 19,000, we are seeing some consolidation or a breather. But sooner or later, we would expect Nifty surpassing its all-time high and then probably, surpassing the milestone of 19,000.
All right. So with this, what's the strategy essentially that you're suggesting to our viewers out there? Is it, some amount of sideline trend that you expect the markets to witness, like you said? And what strategy would you suggest the viewers to go long, short on Nifty, Bank Nifty? What's the strategy that they can take on their trades right now?
See, the direction trade remains on the long side. But when you're trapped in a range, the best strategy would be to buy as close as possible to the support zone. So as I mentioned, support zones were 18,650, 18,550. Try to buy as close as possible to support levels and try to exit as close as possible to resistance levels. So as of now, the strong resistance is somewhere around 18,800, 18,900. So this is the range. And once we see a breakout happening beyond 18,900, the positional trade continues on the long side. And then, as I said, probably 19,000 and 19,200, these are the next levels to watch out for. Banking space has been, sulking a bit. It has been laggard. But overall, we believe that till the time we do not breach 43,000 on the lower side, the directional, bias remains positive and try to go long as close as possible to these important support levels.
Sure, I'd also want to understand two profitable bets coming from you for our viewers out there, which could be money-making ideas for them.
See, I think the stock-specific momentum continues, and recently, if you see, pharma has been finding its mojo back. So we like Dr. Reddy from this space. Stock has already rallied quite a lot in the recent past. But yesterday we saw, breakout happening, a fresh breakout happening from its, multi-month highs. So we like Dr. Reddy as a momentum trade for a target of 5,200. Stop can be placed around 49.60. The other buy would be from the new age companies. If you see in last 1.5 year, this stock did not do anything well. But in last couple of months, we are seeing good comeback. The stocks have already make a good comeback. So Policy Bazaar is the one stock that we are liking. Stock has been a steady mover of late, and yesterday it managed to surpass its recent high. Thereby, it confirmed its breakout as well. So we like Policy Bazaar for a target of which is known as PB Fintech for a target of 745. Stop can be placed around 676.
All right, so that's the recommendation coming in. But we have a couple of stocks to address, and we're going to be addressing in those stocks before we get back to our technical expert. But let's go in and first discuss the stocks that need to be on your list. Bharti Airtel is the one which you need to keep on your list. Aditya Birla Capital, SBI Life Insurance Company, and Sapphire Foods, along with BLS International. To also bear in mind the fact that Cyient DLM will be hitting in the primary markets today for subscription day one, and we are going to be talking about that in details towards the fag end of the show, where we also spoke with the management. But Bharti Airtel first. Bharti Airtel has announced changes to its leadership team in the Airtel business. Ajay Chitkara has resigned as the CEO of the Airtel business. Airtel business now is expected to operate as three business and channel segments. Now, what Morgan Stanley has to say about the outgoing CEO, which has resigned, also was a part of the company for almost 23 odd years. They acknowledge the fact that the departure will have a significant impact, but also believe that a leadership team is already in place for the company, which will ensure the business continuity. Talk about Aditya Birla Capital, which is launched in QIP, and the floor price is set to an extent of around 175 rupees per share. The QIP is launched on June 26th, and as indicated, the sources that have told CNBC TV18, the fundraising is likely to an extent of around 1,750 odd crore. Let's talk about SBI Life Insurance Company, where again the director of the company has resigned with effect from June 26. RBI has appointed Swaminathan now as the deputy governor. He was the nominee director representing State Bank of India. That's another one, a bit of change of leadership stance coming in even for SBI Life Insurance Company as compared to what we saw for Bharti Airtel. Of course, we're going to be tracking in Airtel after the market opens. Sapphire Foods, where there's going to be the holder is likely to sell, India holder is likely to sell around 3 million shares, beg your pardon, via block deal, and that's expected to take place around that 1,345 to 1,391 per share. Not sure if that already has taken place, but that's the one which was expected to be done. The company is seeking to raise around $51 million via the placement. That's the word coming in. BLS International Services. Well, IPO market is up and running, and the company's subsidiary probably wants to tap in on the market appetite. The subsidiary, BLS E-Services, has approved fundraising via IPO. Now, the board members of the subsidiary plan to go with the initial public offering. The size of the offer and the other details, of course, will be determined in due course. So that's the word coming in on the entire stocks and news that we have. But I'm going to go back to our technical expert and check with him of what he makes for Bharti Airtel well ahead of the market open. Sameet, do we still have, just wanted to understand from you your stance on Bharti Airtel. Change in leadership stance coming in for that one. Do you think a little bit of probably negative reaction could creep in for the counter? And if yes, would that be a buy on dip strategy for the market participants out there?
See, technically speaking, as of yesterday's close, there has been no damage done in the price pattern. Overall, the structure has been steady. Till the time Bharti Airtel does not, break below the important support of 830, 835, there is no reason to worry for. In fact, any dip towards those important level in case of any
Sure.
negative reaction, it
Sure,
would be a good.
Sameet. Sure, Sameet, we're just going to be addressing in the market open and again get back to you and speak to you about Bharti Airtel and slew of other top gainers and top losers. Nifty 50, let's address in that. We're seeing gains to an extent of around 0.3% coming in on that one. A good start coming in for the markets, 18,750, around that level, but roughly a little far away from that level thus far. Bank Nifty, that's another one for you, outperforming probably neck and neck with the larger counterpart. Talk about the broader indices just to see if we're seeing a level of outperformance creeping in from those counters. And yes, mid-cap index, like always, has been holding up and outdoing the larger counterparts. Talk about small cap index to see if that's where also the traction has been building up. Well, the gains remain in the favor of small cap index too, with gains of around 0.6% out there. IT index, sectoral indices, that's clearly, IT has been badgered down in trade for a couple of sessions. Some amount of recovery and inside coming in for that one. Let's talk about other sectoral indices that we have. FMCG basket, 0.3% of gains coming in for FMCG basket. And if we talk about overall for other sectoral indices like the pharma, where gains were to an extent of 0.4% out there. So it's also a good day coming in for the rate sensitives too. Banking has been doing well. Auto has been doing well. It's across the board probably where we're seeing the optimism lying. Not looking at, clearly need to pick and choose the counters which are not doing well. Metal right now has been holding up and with gains of around 0.75%. More than that, the consumption story remains intact. Banking story remains intact. Right now, if you talk about the market spread, 24 advances as compared to 24 declines. Need to see right now the market spread seems to be evenly divided, but on an update, advances 42, declines 7. So clearly right now the market rates remains in the favor of advances. Adani Enterprises, Coal India and Infosys. These are the top gainers for you. Asian Paints, Nestle India and Tata Steel. So basket of FMCG and metal combined together has been doing the trick for the markets this time around. Talk about the top losers that we have on the screen. We have Hero MotoCorp, Titan, Cipla. These are the top losers, and IndusInd Bank and HCL Tech needs to be the one which needs to be watched out for. Let's talk about Bharti Airtel and pull up the performance for Bharti Airtel because there is a change in leadership stance coming in on that one. CEO of 23 years, which has been around and stuck around in the company for more than 23 years, has resigned, although new leadership is in place for continuity. But right now, the stock look like a bit of overhang there. Seems to be done past with for Bharti Airtel, and we looking at gains to an extent of 0.3% coming in for Bharti Airtel. Let's also talk about how overall metal basket has been shaping up with Sameet out there. Sameet, I'm just going to come back to you and check with you your assessment of Bharti Airtel. And also these metal stocks which have been doing well amidst the basket. What do you like and why?
See, as far as Bharti Airtel is concerned, as we were mentioning that there has been a strong, sturdy structure which has been witnessed in Bharti in the recent past. So till the time it does not break below 830, there is no reason to worry for. In fact, any intermediate correction would be a good buying opportunity. And slowly, gradually, we would expect the stock heading towards 880, 890 kind of zone. So overall, the bias remains positive, and as a momentum trader, 820 or a positional trader, 820 should be placed as a good stop loss. It's a decent level to watch out for. And as I said, slowly, gradually, stock is likely to head towards 880, 890. Among the entire metal space, there has been some deceptive moves in the recent past. But the kind of price traction that we have been witnessing since yesterday, Tata still seems to have found its support around 106, 108, and today we are seeing good traction in the early trade. So overall, at current level, we like Tata still from the metal space, but overall the range is quite defined. 116 on the higher side, 108 on the lower side. So it is now rebounding from its lower end and is likely to head towards 114, 116 kind of zone.
Sure. I also want to understand from you, is there any other bet that looks attractive at this point of time from the IT basket right now?
See, from the IT space, we like HCL Take at current juncture. Stock has been consolidating since last 3, 4 days. But if you look at it from a slightly broader perspective, stock has already surpassed its multi-month highs last week. So 1140, 1150 has been acting as a sturdy wall, and last week we saw a decisive breakout happening from this. So there has been no follow-up buying, but sooner or later we would expect the stock, challenging the 1200 mark and then probably moving beyond it. So bias remains positive for Excel Tech, and within the IT space, we expect this stock to outperform the basket.
All right, Sameet, we'll leave it at that. Thank you so much for taking out the time and speaking to us. We are going to quickly now, navigate our conversation around the fundamentals, because there's a lot going on in the Indian equity markets with regard to the FII trend, with regards to IPO, the flurry that we've seen. And to join us to take the discussion forward, we have Nirav R. Kareka, Head Research from Fisdom, joining us early this morning. Good morning there.
Good morning.
All right, I'm going to start off with your assessment overall on the direction in which Indian equity markets are headed. Because we're seeing a lot of inflows coming in from the foreign funds. In this month also, the trend has been supporting thus far. Macro seems to be reasonably placed. Of course, it's an holiday truncated week, and by virtue of that, a lot of macroeconomic data also is lined up in the entire week put together. How are you looking at the direction, and what are your, picks within a very broad question within the mid-cap space for that matter?
Sure. So like you rightly said, the highlight of the past couple of weeks have been, the turnaround that we have seen in foreign capital and foreign portfolios interest in Indian markets. One thing, that one should take note of, while there is a consistent and growing interest of foreign portfolio investors into Indian markets, the very recent developments can be attributed to block deals that have been happening in the recent past, and that entailed a lot of foreign capital participation. So in the last couple of weeks, the flows that we saw in the past couple of weeks could be an outlier sort of an event. However, at a broader level, we expect foreign inflows to continue and sustain into capital markets. In fact, at the same time, another point that was mentioned at the start is the primary market issuances. So the IPO market is once again gaining its mojo. It is gaining a lot of traction and interest, both domestically as well as in terms of foreign interest. So that could be a very good segue for foreign capital to flow into Indian markets. Overall, the macroeconomic situation for India remains structurally sound. Just this morning, I went through the highlights on forex reserves growing by another 2.5 billion, going up to almost $596 billion, which is a good sign. Especially considering that especially considering the slowdown that rest of the advanced economies are at the brink of. India stands quite isolated, even from the emerging market pack as an opportunity. You look at other high frequency macroeconomic indicators, you would notice a stark differentiation vis-a-vis other emerging markets. So while the world is looking at emerging markets, they're taking an even further and closer look at India as an investment destination. Obviously, in the shorter term, there could be certain risks emanating from global spillovers. Like, for example, over the past weekend, we saw, we were all following the debacle surrounding the purported or supposed civil war in Russia. And then there is obviously a hawkish undertone being maintained by the US Fed, and a higher than expected sort of rate hike by Bank of England. So if in case of any risks that the Indian macros are facing, it would be in the form of spillovers of such adverse global developments. However, internally, domestically, facing the macros are really sound. High frequency indicators are indicating an uptrend. The economy is expected to enter an expansionary cycle. You could look at the manufacturing indices and services indices, while one is growing at a faster pace than the latter. There is a clear sense that we are entering an expansionary phase and the investment cycle is just kicking in. So better days are far ahead of us, but today is an amazing day in terms of India's positioning from a macroeconomic backdrop perspective.
Sure. We spoke about macros and pretty much the structural story in the way markets have been faring, and of course the indicators that have led to the upturn. But let's now narrow down our discussion to stocks, and sectors that you like. Mid cap index is the one where records high, day after day we're seeing highs being scaled. Within that basket, what do you like with the highest return potential according to you, and the reason why you have selected that pick?
Yeah, so the mid cap index overall has been gaining a lot of investor interest, both institutional and retail, also since quite some time. The valuations have come off of its peak at a headline level. Valuations are looking far more comfortable, and the space houses some of the most stellar companies in terms of quality that is available in the Indian markets. There are dominant niche industry leaders available in this space. There are a few companies that we are looking at. Obviously, apart from the known unknowns, there are a few companies that continue to remain somewhat underrated because of their unconventional financials. Okay, but there are structural tailwinds to the growth of these companies, and there is one common thread that runs across all of these companies, and they could be characterized by terminologies such as new age, technology enabled, and consumer facing companies. So the first one that I would probably like to talk about would be Paytm. So Paytm has been in the news for the longest time, and quite often then not in very good light, owing to its financial health and its unconventional way of running its finances. However, we believe that Paytm as a business is fundamentally strong, and it has very strong growth prospects going ahead. If you look at it, the macros are in favor, right from digital penetration to growing remittance through digital modes to considering the fact that the market is really ripe for lending opportunities both in the unsecured space and merchant lending space. So Paytm is firmly positioned within the industries. It retains its market share in the digital payment segment. The financials are getting healthier quarter over quarter. One could notice a clear trend of revenue expansion and bottom line earnings growing on the back of cost efficiencies kicking in. One very important and underrated segment would be the devices segment, talking about the soundbox and the POS machines. This is a very underrated segment, both from a revenue standpoint and business expansion standpoint. This remains a critical play with the potential being largely unknown to date. However, if one were to take an educated guesstimate, the potential would swing towards the positive surprise end of the spectrum. So these are a few things moving in favor, along with obviously the lending aspect of the business, the merchant lending really picking pace, and postpaid disbursements going up. Obviously, there are concerns around how does the firm intend to manage delinquencies, but it would be too early in the game to read far too much into that data. So a culmination of these really position Paytm. And when we talk about Paytm, there is another stock that really comes to the mind and has been in the news very recently, in terms of being a new age consumer tech company. It would be Zomato. So Zomato has been an interesting company. Like Paytm, Zomato also operates in a very niche industries with very less comparable peers. In fact, almost virtually none in terms of listed peers. So the growth of the company has been reasonably flattish in terms of the top line. However, while Blinkit and the food delivery segments are reflecting flattish growth, there seems to be some sort of confidence brewing on in the hyperpure B2B segment. The hyperpure segment, B2B segment, is an underrated segment. Obviously, it is in its very initial stages. One would have to watch out and see how with how much efficacy is the operations managed, and how early would the B2B business turn profitable in select cities before it starts expanding into other physical locations. However, at an overall level, one could expect the delivery cost to drop reasonably as economies of scale starts kicking in, even as it increases the minimum ticket size for free delivery and discounted delivery orders. There would be a tiered charging system which would improve cash realizations.
Sure.
And yeah,
Sure. So that's the word coming in for the new age companies. Clearly, I'm not surprised there, given the kind of correction that we've witnessed overall in the trend that these stocks have. Otherwise, probably people were waiting. Most of the analyst community was probably waiting for the signs of the financials to pick up and probably play up on that. Paytm was one, and Zomato was the second recommendation, which came in from Nirav. Nirav, shortly, in just 30 seconds on this one. IPO market is, pretty hot space right now. If you talk about the Cyient DLM IPO, which opens for subscription today, Idea Forge, which had a great inning on the first day of the bidding process, at least. And you also have one more IPO, I guess, PHE, which has come up for, which is going to be coming up for, the entire subscription profile within this week. Of the three, what do you like and why?
Yeah, so while all the three brings unique merits, I feel I am clearly in favor of Idea Forge as a business. It remains a niche leader, and its product mix is, really confidence-inducing. The financials are growing healthier by the day. Obviously, it had some trouble recently if one were to go by the financials, but from a revenue expansion and business growth perspective, clearly Idea Forge is really strongly positioned. So if I have to pick among the three, I would clearly select Idea Forge.
All right. So PKH Ventures is the one which is going to be opening in for subscription in this week. But, Nirav, I'm going to thank you at that. Thank you so much for taking out the time and speaking to us. Idea Forge had a great, strong footing on the day one of the subscription out there, but we caught up today. We caught up with Cyient DLM, management, which is a subsidiary of Cyient. The IPO dates of initial public offering will open from today and will be up till June 30. We caught up with the management. Have a slice of the conversation.
We are looking at a fairly significant opportunity ahead of us in the electronic manufacturing space. I think both from a macro perspective, given where geopolitics are and companies want to de-risk their supply chains, India becoming a more viable market, the government's focus on PLIs and other incentives for manufacturing, and just how many electronics are being used. All that means that there's a lot of demand from a macro perspective. And also from specifically our perspective, there's a fairly significant value proposition that we have in the industries that we work, the clients that we have, and of course, the design-led capability, which is quite unique. And I would say not many, if not anybody in the world has that ability to go from design to manufacturing in this space. So the opportunity is quite significant ahead of us. And that's why we're raising the money for a couple of things. One is we have external debt of about 150 crores. I'll answer the second part of your question on when we'll grow debt-free in a second. But we intend to pay off the external debt first because the finance costs are hitting us, and it's a good opportunity just to unburden the balance sheet a little bit with some of the finance costs. So we'll pay off that debt, which is about 150 crores. We'll use about 300 odd crores for working capital. Again, the opportunity is significant, so we will need this working capital for the next few years. And then, of course, there's a little bit more money also kept aside for a few capex and also some capability-related acquisitions, of which about 70 crores is set aside. So this is how primarily the 700 crores that we're raising will be used. Like you said, there's 592 is the public offer, but there's also 108 from a pre-IPO, so total is 700. There's also about 200 crores, give or take, debt from the parent, which won't be paid away from these proceeds. That debt we will pay over the next couple of years using the cash flow from operations. But having said that, we think that having a little bit of debt on the balance sheet is also a good way to leverage the balance sheet in capital. So therefore, we're not very worried about the debt that we have. It's just that the current levels were a bit high.
All right, so that was the management of Cyient DLM. They said that they expect the margins to expand as a key takeaway, and they don't expect to be debt-free anytime soon because they prefer having some amount of debt in the book. The issue size has been reduced, and significant buzz has been created around this IPO, which is a subsidiary of Cyient. But with this, it's a wrap and goodbye from the entire team who puts this piece together for you. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.